You are listening to Germantown Community Radio, WRGU 92.9 FM. Welcome to the Jumpstart Philly Real Estate Radio Show, a weekly radio program that spotlights positive real estate development and neighborhood revitalization throughout Philadelphia. I'm your host, Derek Hengemel. Jumpstart Philly is a unique community development program that trains, mentors, networks, and provides funding to aspiring real estate developers in 7 different Philadelphia neighborhoods, including Germantown, where the program was founded. Jumpstart believes that you can do well by doing good and focuses on removing neighborhood blight, scattered site rehab, creating a healthy mix of affordable and market rate housing, and avoiding gentrification through slow, steady growth and keeping wealth local. Interviews are conducted during Jumpstart Germantown's weekly Jumpinar series on Monday nights at 7 p.m., held via Zoom webinar. For more information about these events, check out the events page at jumpstartgermantown.com. This week, I'm having a discussion with Joseph Scorese, a mortgage industry professional with LendingOne, about the loan programs and options available to aspiring developers seeking rehab properties. I hope you enjoyed the conversation, and be sure to check out the podcast version of this program at jumpstartgermantown.com/media. And Joseph Scorese is a major mortgage industry professional who is committed to helping his clients, and he has more than 20 years of successful experience in sales origination. Joseph continues his work in the private lending industry and has built a career as a talented and reliable business development manager at LendingOne. He brings expertise, knowledge, and uses in-depth knowledge of the mortgage process to ensure his clients have the best mortgage possible to fit their financial and life goals. With a proven track record of getting the job done, Joe takes great pride in making the loan process as easy and stress-free as possible for every one of his clients. And hopefully he's going to do that for some jump starters tonight. And it's great to have him with us. How's it going, Joe?
Doing fantastic, Derek. Thank you for inviting me on.
Yeah, no problem. Well, I don't know if there's anything you want to add to your introduction or things people should know about you up front, but otherwise...
Well, a little bit about LendingOne real quick. LendingOne was recently acquired by Blackstone Capital, which is one of the largest hedge funds in the private lending market and investing piece in the country. The acquisition was in the third quarter. I was brought in as part of that. I was recruited out of regional banking from First Trust Bank. And I've been really with regional banks for the past 20 plus years, doing residential/commercial lending, construction financing. So LendingOne was a good fit, becoming a regional development manager covering the Northeast. But I'm licensed in all 50 states to provide financing in one scenario or another for 1 through 4 units, residential and or multifamily units as well.
Great.
So additional background.
Yeah, so I always like to ask our guests, are you a developer yourself? Have you taken on any of your own projects?
I took a couple of years off from a brief injury, and I'm going to be getting back into it as the market corrects itself this year. So I've assembled my team, and we're evaluating markets. So really, since I'm traveling so much from market to market, I'm actually evaluating not just for my clients, but also for myself. I've picked a few markets that I think I really like. One of them is not Philadelphia, but I think I'm going to hone in on that a little bit more in the next couple months as the market starts showing some distressed sales and some short sales and workouts by law firms. And I think inventory is going to increase. Rates are going to move up on the residential side, meaning first-time home buyers, secondary home buyers are going to have a little harder time acquiring homes for themselves.
Okay. Yeah. And that's great to hear you have some development experience. It's like you see both sides of the coin, both as a lender and a developer. So I'm sure that gives you a great advantage in discussing this with us. So LendingOne, as I understand it, is a private and hard money lender. Or am I wrong about that?
No, we're not a hard money lender. We are one of the largest private lenders in the industry in private lending. Private lending has created its own lane, and it's okay because most people don't know there's actually a true difference now between hard money lenders and private lenders. It's a completely different lane. Private lending is supported completely by hedge funds and Wall Street.
Okay.
The money is a lot less expensive, moves a lot quicker, and it's much more of a strategy in private lending than more of hitting you with high costs on the hard money side. Hard money is really more strategic toward a specific deal. We're looking and strategizing for the client overall for them to become operational and scale up.
So do I have this backwards, or am I right about all private money? Excuse me, all hard money is private money, but not all private money is hard money. Is that right?
Correct.
Okay, gotcha.
Good way to look at it. Actually, it's actually a very savvy way to look at where most hard money has gotten a lot of softer on cost of interest rates and origination, but you're still seeing single digit or low double digit and high origination between 2 and 4 points on the hard money side, where private lending, I'm charging anywhere between only 1 and 1.5 on origination. My rates vary depending on whether it's a rental, refi, or purchase, if it's a rehab, if it's a one-time close BRRRR strategy, is it a new construction, or is it a multifamily refinance or purchase, or is it a multifamily bridge conversion, repurposing into a 30-year fix on the multifamily side, meaning 5+ units? Are we doing a revolving construction line of credit for the borrower once they build up their revenue, their reserves, and their relationship with us?
Okay. Yeah, and I'm sure a lot of people are familiar with the answer to this next question, but what's the alternative to private money? I mean, it's not public money, but it would be a traditional kind of bank institution, right?
Well, there's private money, which you brought up, which is another term. That's typically self-directed IRA money. I know a lot of those type of individuals that lend their self-directed IRA money out of their retirement. There's obviously hard money lenders that obviously create funds with retirement money of others and money of their own through maybe a line of credit. And they charge a higher accelerated, harder rate. But their strategy is very short term. They have to evaluate the deal to be able to recover the property. Because if they don't, they're not evaluating it correctly. Where private lending, we evaluate the deal, but we're building a relationship with that borrower. We're looking at strategy to grow, scale, take you from 1 to 2 deals a year, maybe get you up to 3 to 5 deals a year, and kind of take you from what we call mini elephant or mini whale to whale or full elephant. So we try to get you out of the rat race in a different pace. Yeah, that comes with pricing and origination.
Right. If you could just expand more upon those pros and cons of choosing a private money lender as opposed to a bank lender. Obviously, it's faster. It's like it allows you to get your foot in the door, right? It's sort of
Well, now the bank lending. We're jumping now to bank lending versus private lending. Bank lending, which I came from, there's a lot more paperwork. It gets very heavy. It gets a little more sticky. There's more restrictions. Timing might not be there in getting timelines closed. Loan to cost on the purchase and rehab, and or the opportunity of long-term lending on the back end to hold long-term for generational wealth. The local banks or community banks, they just can't provide 30-year fixed money. They just can't provide up to 80% loan to value on 30-year fixed money. They're restricted to 5-year money, maybe 10, but there's no way they're able to provide a 30-year fixed cash out. And private lending, comparatively to bank financing, we don't have a seasoning. Once you have the property stabilized, leased up, if you have some level of experience, we'll even look at the market rent initially if you don't have it leased up yet. But if you turn the property around from a rehab and renovation perspective, we're not restricted to timeline in refinancing that property. So we don't have a seasoning period whatsoever. And in private lending, and I'm going to compare a couple things here at the same time, from a rehab perspective, meaning a bridge, rehab, BRRRR strategy, or renovation, our turn times are under 15 days in renovation loans. So we're equivalent in speed and expediting as a hard money lender, but our origination, and I'll go over that real quick, can range depending on your experience and credit. We can go up to 90% loan to cost on purchase and 100% on the rehab, and up to 75% on after repair value. And our rates go as low as 6.99 and with an origination of 1 point. Now, again, you have to fit a certain complexion for that, but the opportunities are there. We even have opportunities in the 30-year fixed range in the LLC that go as low as 3.25. on a 30-year fixed. Now, again, there's certain conditions with that, but our par rate for that program, meaning that we look at your tax returns and W-2s, starts at 3.25. If we don't look at your tax returns or your W-2s, and we just look at to make sure that the returns are filed, but we're really looking at the asset, we're starting at 4%. No, maybe even less. We can get into the high threes. But again, a bank can't do that because they're given a certain pricing. Where private lenders have a lot of flexibility depending on the borrower. So the borrower's immediate 24-month or 36-month experience, credit score, profitable deals they've done, profitable deals they have currently in their portfolio, all derive better pricing in their favor. So we're going to try to make it work as we grow with them in the private lending space comparatively to the banks. Because once you close a deal and you go back to them, they almost forget who you were. You might even get reassigned to another LO, which now you got to start really from ground zero. So here in a private lending space, we're building relationships and strategy to really take a borrower to the next level in their real estate environment.
Yeah, and how about the kind of loan application and loan review and approval process, comparing both? I mean, you mentioned there's a lot more paperwork on the traditional bank side of things, and obviously, red tape and paperwork is always going to be a thing. But how about like what is the rigorousness of the loan review? How much due diligence is there in both scenarios?
We're going to look at corporate documents. Obviously, your operating agreement, make sure it's signed and executed. Your articles of formation, your letter of good standing, and your EIN letter. So that's what the corporate docs we need on the property, the LLC that's assigned to that property, the subject property. If it's a rental, we want to see the leases. If there's insurance, I want to see the homeowner's insurance declaration page. I want to see a payoff letter. If it's a refinance, if it's a purchase, we're going to need an executed purchase sales agreement. We're going to need to see bank statements, whether it's a retirement account and or savings account, which show me the money. I need to see 2 months of bank statements. That's about it. Now, again, if it's a bridge loan, I'm going to need a construction estimate with a draw schedule, which we provide you a spreadsheet to use. We're going to need to see that construction budget, the draw schedule. We're going to take a small BPL look at the after repair value, mini appraisal, which is not a full appraisal. So we're going to look at your experience on that as well. But, we can go as low in the credit score, probably 660, but again, the complexion of that loan scenario is going to change based on credit score. Now, again, if you have a lot of experience, but your credit score is a little hit up because of just doing some stuff in your personal name, you didn't realize there was a lot of opportunities to do loans in the LLC. We can get past that because we have flexibility. It's our money. Blackstone, it's kind of, we don't have any caps. We don't have any limits like a bank would. Like if you go to a bank, you're probably capped at 2, 3, or 4 million. They can't do any more business with you, because they don't want to take you become a higher risk to them if your dominoes fall, God forbid. So private lenders, like I said, from Blackstone perspective, I have not seen a limit not met yet. I've seen 40, 50, $60 million transactions close, in the month individually. Most of the loan officers here are doing originating, closing anywhere between 80 and 100 million a year. So, we're looking for high volume. We're looking to get deals in and out, cleared and closed. The only hiccups that there are in certain situations when an appraisal is needed, there might be a slight hiccup because the appraisal industry's taken a massive hit because of the volume last year. But I think that's slowing down quite a bit. Word has a lot of appraisers are doing more bank REO appraisals than actually first-time home buyer appraisals right now. So that's actually a sign for the market correction to come.
Okay, great. And yeah, hopefully if we get through this next section of questions, we can talk a little bit more about, like you said, you were going to touch on some industry trends and kind of, larger perspectives that you have on the lending industry, like on this scale. So maybe if we have time at the end, we can get to that. But the next kind of topic I want to cover is the types of loans. We can specifically talk about what LendingOne offers, but people hear rental loans, fix and flip loans, or buy and hold, buy and sell, or 30-year mortgages. There's all sorts of classifications of loans that people have to choose from. What does LendingOne offer, and what can people kind of expect to be shopping for?
Fantastic question. Rental loans, meaning whether it's a refinance or purchase. Now, if it's a refinance, our minimum loan size is 75 grand, so we can't really go below that. If it's a purchase, again, minimum loan size is $75,000. So, minimum value has to be 100, 110 on the front end. Fix and flip loans, they're getting a little slower right now because, again, it's a correction timing, but we still do them quite often and we evaluate all the time. I'm seeing more of that in the Southwest market of the country, more to the Northeast. Portfolio rental loans. That means we are portfolioing your loan. It's a loan that never will sell. It's managed by our hedge fund, Blackstone. So pricing is very competitive. We can get very creative depending on the size of your portfolio. Multifamily bridge loans, meaning somebody wants to convert a warehouse into an apartment complex. We like that. We want to see some experience, but we like those type of deals: conversions, repurposing of commercial buildings into multifamily residential. We'll even allow a blend up to 30% of mixed use into the building on those. New construction loans. We like new construction. We feel new construction build to rent is going to be a hot item in the new year, going into mid-year. So we actually have a product where we can refinance you out of the new construction into a stabilized loan up to 75% loan of value. We could either do that non-recourse or recourse, meaning the responsibility of the property goes back toward the asset on the non-recourse side. Minimum size loan on the non-recourse, I make it very clear, is $1 million and above, and or 10 properties. So in the Philadelphia market, that's not too complicated. I'm doing several of them right now. People appreciate that. The only difference between non-recourse and recourse on the lending option side, the non-recourse is an ARM option, meaning there's a 5, 7, or 10-1 ARM option with a 30-year amortization. On the recourse side, it's a full 30-year fixed. We have blanket loan programs, which we can blanket multiple properties. Keep in mind, there is a prepayment on all these commercial loans. So if you want to sell one of these properties off, you will get hit with a prepayment penalty first 5 years, 5, 4, 3, 2, 1. But it's an excellent way to save on processing and underwriting charges per property, where you could do one loan and get one charge. We do 5+ unit multifamily acquisition or refinance, up to 75% loan of value, up to 40 doors. So, we're competitive with the multifamily space in Philadelphia. Most size multifamilies anywhere between 5 and 20, but we've been getting very competitive with that. 30-year fixed. There's not a lot of people offering that right now. Probably none in this market. And we have the ultimate debt service bank statement loan, obviously the no doc. We do want to see tax returns filed. I don't care what they say, what's on them, because I'm really looking at the asset. I just want to make sure you're not in tax fraud or you're avoiding taxes. I want to make sure they're filed. But we have obviously debt service coverage ratio and bank statement. That's and we do have a revolving construction line of credit program. So say you show me $100,000 in reserves, liquid assets, I could create a line based on acquisition of burst strategy type of environment up to $1 million. So you could do multiple deals at the same time. Say you identify a bunch of properties on one block and you want to try to take them all down. I'll get a little aggressive there and, be able to do multiple transactions at the same time with a more of an experienced operator. This is not for the newbie, the revolving construction. So the people that are new here that don't have a deal under their belt, I'm not going to even have that discussion with somebody like that because they're not experienced enough or have no experience. What I would say is find yourself what I call is the gray hair person, meaning the individual that has the experience, has the resume, to assist in the partnership to get that really aggressive pricing that private lending is providing right now.
If you're just tuning in, this is a conversation with Joseph Scorese, a mortgage industry professional with LendingOne, about the loan programs and options available to aspiring developers seeking to rehab properties. Thank you for listening to the Jumpstart Philly Real Estate Radio Show on Germantown Community Radio, WRGU 92.9 FM. I hope you're enjoying the discussion. I hope you're enjoying the discussion. Okay, great. And I think you got through all those, but I want to go back and talk about a couple of them that I think are particularly relevant to Jumpstarters. Like Jumpstarter's mission is to remove blight from the community and typically like acquire a blighted property and put a certain amount of construction into it and then, sell or rent it. It seems like a few of those loans you mentioned, have a construction or rehab aspect of it. I just kind of wanted to ask you, like for your fix and flip loans or your fix to rent loans, or maybe even one of the multifamily or new construction. I guess new construction doesn't have much blight removal. But what does the deal typically look like? What sort like when people are, I don't know if you have a loan application process or.
I think I know where you're going to go with this. So let's say hypothetically, the acquisition is $100,000, the purchase price.
Mm-hmm.
For a newer individual, I'm going to be very cautious. I don't want to see repairs above 50%. That means 50,000 in repairs. Because the less experience you have, the more risk that you're going to fail. I mean, it's a natural thing that's happening because of supply chain issues, labor issues. I mean, GCs are coming and going. Everybody's a GC now, raise your hand type of thing. You have material cost shifts. I mean, you got a lot of problems here. So for the newer individual, there's a higher risk. So I'm not saying find something where you're going to throw lipstick on a pig, but I'd definitely be careful. I'd probably stay somewhere between 35% to 50% repairs percentage to the purchase price. Safe to say, nobody really tells you that, Derek, but I'm telling you as a strategist to move. You're going to get stuck in your deal and you're not going to be able to get to the next deal because you're overwhelmed with the project. It sounds good, looks good, but it doesn't get to completion. There's not a person on here that does not know somebody or one person away that the GC disappeared on them and they had to get a whole new GC. The cost doubled up, material costs changed, the bid wasn't correct. Keep your repair costs under for 50% of any of your acquisitions, and any private lender will feel more comfortable in funding your deal.
Mm-hmm. Yeah, and specifically, I guess, if for people who lack significant capital to kind of get started or acquire that first property, a lender like yourself or any private hard money lender is able to adjust that loan to cost ratio, right, and kind of provide more of the money that people need up front to boost a project, right?
We could, and I also have a program with business lines of credit up to $500,000. It's definitely credit oriented initially. If you want to, like, say you want to grab a correct $100,000 in an equity line, like a business line of credit, to put it into your account to show liquid assets, it's definitely going to be focused on your credit. So I would say, the better the credit, the better chances of getting those business lines. I would say 700 a score and above is very compelling to get those credit lines set up. I'll give you a great example. My wife owns a wellness center and a school for massage therapy, and she needed $150,000 to grow her business out. I was able to qualify her and have her that money within 30 days in her account. She was liquid. And she was able to, double up the size of her wellness company, her massage therapy school, and it's been great ever since. And that paid itself back, but those lines are still available once you pay those back. So it's not like you use those lines and you never pay those lines back. Those are yours permanently. So if we can get you qualified for that first, that's a great start.
Okay, great. Well, I think that was a great overview of the different loans that LendingOne offers. Unless there's any other specific information you want to tell me about any of those, I'd love to pick your brain a little bit, I guess, about what's going on in development in Philadelphia right now, if you can, and as a lender seeing deals, what's going on?
Well, I've been to. I know we talked, briefly over the other day, and I've been traveling the last 3 months, to various lending events and meeting with very smart, very intelligent individuals in the industry. And I really appreciated their time that they brought to these events that I was lucky enough to attend. And there was a general consensus, private lending plans on putting over $4 trillion to work for investors in 2022. I mean, all the different programs I discussed. And LendingOne is committed through Blackstone Capital to put out $3 billion worth of money. So we're very aggressive. We want transactions. We want to close them. We want to close them in a timely manner. And I think every private lender out there wants to do the same thing. It's a matter of who's going to have the right staffing and who's going to be able to get back to you in communication to get your deals done. It's going to be all about communication. I think people are not overly concerned with pricing as much as they're going to be with communication with their direct contact at the lending source. And that's anywhere. Time kills deals. Yeah. So getting back to the customer today is more important than ever. And I don't think everybody has that, I hate to say, a talent. You know what I mean? It's a hidden talent. You have to have 1,000 failures before you have 1,000 successes to understand this. And the industry, from a perspective where they're trying to pluck professionals like myself out of the residential commercial space to dedicate totally to this private lending space, because this is going to be where investment financing is over the next 5 years. You're not going to be able to have this available funds like a local bank or local regional bank, where they're just not going to be able to facilitate the pricing that's going out there. I mean, who's giving 3.25% on a 30-year fixed in the LLC? I mean, there's nobody in the industry doing that. When the Fed announced that they were raising their rates 3 times next year, LendingOne and a couple other lenders that are out there that are near competition to us dropped their rates by 0.5 point the same day. So they dropped their rate, and the Fed increased their rates for the Fannie and Freddie lenders. It's going to get really tough. These local banks are just not going to be able to facilitate. And then a lot of these brokerage companies that broker loans through direct lenders, they're charging extra fees to the origination to the borrowers right now. When I'm offering 1 to 1.5 on origination on a rehab loan or a construction loan or a rental refinance or purchase, when most lenders out there that I'm running into are charging 2-3 points, right off the bat, we're cheaper without even having a further conversation. Mm-hmm. That's some of my thoughts on the industry and what I've been seeing over the last 3 months leading into this meeting today.
Yeah, I mean, well, one thing you said particularly rang true in my experience with just the speed at which you need to, have a lender respond and your title company get you all the information you need in the specific time. It's not only is there a time crunch in general for it being a potential investment, but the real estate market right now, it's like, people are just jumping at the bit to buy properties. So, when new developers, like many of those on our call, come with, not so secure money or pre-approval letters, they don't get taken as seriously as cash offers, right?
Yeah, and that's why what I've done now is I've committed to the second Monday evening of the month holding an event actually at Philly Office Retail, 6:30 in the evening at the office on second Mondays, and second Saturdays I'll be there as well for more of a mastermind event from 10 to 12, second Saturday every month. We started in January this month. We're pretty excited about it. We're committing to 6 months. The next 6 months are really hitting some really great education, and then we'll figure out the next 6 months. But we're committed to work with Jumpstart and work with Philly Office Retail to provide that consistent drip of education that's so needed, because people want me to mentor them. I don't have time to mentor during the day. I'm putting loans together. So I've allocated proper time such as this to give back and hopefully provide the breadcrumb they need, put together that sandwich of opportunity.
So let me ask you this now: how do if somebody in this call heard some of the numbers that you presented on one of those loans and thinks that they have a project that fits the mold, where can they go to either submit a loan application or talk with somebody at LendingOne to discuss the deal?
Basically, they can email me or contact me. I'll take a really quick mini app. I don't run credit, so I run the scenario for them. I literally send them the link application same minute. I send them the checklist right after that. Mm-hmm. Okay. And I sent them the estimated terms. I'm not playing around. Like I'm putting it right in front of them. Take it or leave it. Let's go. Let's get it done. Mm-hmm. When I'm offering, the turnaround and estimated terms along with a potential buy down spreadsheet where you could even buy the rate down more, and the application and the checklist all within about 5 minutes, and I'm not even running your credit yet. Mm-hmm. That's speed. That's expediting a loan. And we have I could actually, anybody here would like to reach out to me, I will customize a portal and set up a portal for everyone on this call, including you, Derek. I'll set up a portal where you could run your scenarios where there's no obligation to run your credit, and it will provide pricing on every different scenario. And if it doesn't, I'm your point of contact at that point, and I will walk you through to make sure you're getting some form of terms and why you're not getting terms. Okay, so I offer a direct portal to anyone on here. It takes about 3 minutes to set up. I just need their name, full name, their email, and their phone number, and I could set them up in 2 minutes. And then I could set up a portal. They get a link, set up a password, and now they have full access to bridge financing, rental financing, purchase financing, pricing, the whole pricing engine, customized for them.
Great. Awesome. Well, I put your email in the chat, so hopefully you'll start to get some notifications from Jumpstarters.
Yep. I call every individual that does do that. So anybody that does email me, you do get a phone call from me, and I set it up for you personally over the phone.
Okay. Great. Awesome. So I do want to move to our Q&A. We're a little ahead of schedule here, but that's totally all right. And hopefully some more questions will get inputted as I get going here. But Joe, if it's all right with you, I'm just going to start reading these off to you, and you can answer.
Sure.
Cool. The first one comes from Teresa, and she was wondering, is private lending more new business friendly versus a bank loan that requires 2 years of business and credit history? So if it sounds like Teresa has a new business or wants to look at finance.
I'm not concerned about the history of your LLC. I'm looking at your credit score, your immediate history of what you're doing in the real estate business, the corporate veil, and the deal, whether it's a refinance, purchase, rehab, new construction. I'm not getting caught up, such as a bank, with the corporate history. Now, if the LLC was created yesterday, we're using it on that subject property.
Okay, great. And I'm sure in real estate, that's particularly common where people will just make an LLC for every property, right?
Well, right now, Pennsylvania is 2 months behind, so be very careful in forming LLCs right now in Pennsylvania. They're backlogged. Keep that in mind.
I did not know that. That's good to know. That's good.
I work with a registered agent who's very good at what he does, and he's actually presented at the events I hold at Jumpstart at Philly Office Retail, and he's backed up right now.
Great. All right, well, that's good to know. The next question here comes from Sterling, and they were wondering, so where do the newbies go if they have excellent credit, 100K plus in liquid capital, and an experienced general contractor on staff? Looks like maybe they were wondering about, like, you had the line of credit option where you were saying, I wouldn't even have that conversation unless they were experienced.
Well, listen, let's get a deal done. That all sounds nice. It sounds like you have liquidity, you have the credit, you have the corporate veil, you have your power team in place. Let's put a portal together and let's run through the system. Let's get you matured into being an experienced real estate professional. It's not that hard. You just need one or two profitable deals, and then you're on your way to having a lot of opportunities open up for you.
Okay, great. The next question comes from Keith, and he was wondering, when do you need a guarantor and when do you not?
Good question. So anybody over 10% ownership of the LLC, not that they have to be a guarantor, but I need to know who they are. Okay, that's first thing. Two, in a non-recourse lending space, the loan size has to be $1 million and or 10 properties. You still have to have a 680 credit score or better, and there's certain things that are verified, meaning a bad boy clause, making sure you've never committed fraud, you don't have a criminal background. They do a criminal background check because they're lending money to an entity with no responsibility to a personal guarantor. So if there's a credit issue, let's fix it. Let's find out why we have a credit issue. If there's a liquidity issue, how do we get your credit to where we need it to get you those business lines of credit? And I surround myself with very smart credit specialists and repair specialists to accomplish that over and over again. And again, there's nobody that shouldn't have the opportunity to become a real estate investor. It's just a matter of how we twist it or mold that clay, really, to make it shape into a statue.
Okay. Next question comes from Tiana, and I can probably answer the first part. She said, I'm on the wait list for Jumpstart. Is there a way to get started with private lending outside of Jumpstart, and what is the process? Well, first, you don't need to be a graduate of the Jumpstart training program. So if you're on the wait list, you can certainly apply for our loan program. You just follow the process just like everybody else. you just won't receive the half point discount rate for Jumpstart graduates. So I think it's 7.35 right now. And then your next question was, where can I receive private lending outside of Jumpstart, and what is that process? And I suggest you go to Joe, right? Our guest.
So first, you start off by sending your full name, your email, and your phone number. I set up a portal for you, and I get a customized feel of what you're trying to do. And when a scenario doesn't come back with results when you run through the portal, I'm still your point of contact. I can still find you proper options. Say it doesn't meet Jumpstart's appetite. Maybe it's outside their landscape of where they want to fund. That's where somebody like myself could facilitate and be, a liaison to the finish line.
Yeah, and that's a great point, Joe. There's some deals that might not work for us, but will certainly work with
I have run into Jumpstart numbers several times, and there's different reasons why they go with you guys, and there's reasons why they don't go with you and they come with me. I mean, and that's fine. I know Ken very well. I have a lot of respect for the man. He's done wonderful renaissance wherever he's touched, his commercial presence. So, I know how to properly entertain those calls when they're trying to shop me against or for other term sheets. It's all good.
All right. Well, our next question here comes from Mariceli, I believe is how you say it. And she said, in regards to the business line of credit, you stated that the credit score you look for is 700. What else do you look at?
I'd like to be there. I mean, I'd like to see how much debt you have. We definitely will look at that. Maybe we can't get you $100,000 or $150,000. Maybe we get you $50,000. I mean, listen, my wife had very low debt, had an 800 credit score. It wasn't really hard to get her 150,000 pretty quick. So it's all going to be case by case. You have a conference call with my underwriters that handle that business line of credit environment. They come back very quickly with decision making and direction and opportunities.
Okay, great. The next question comes from Tracy, and she just asked you to repeat when and where is your second Saturday event. Is there somewhere online that this is posted?
Yeah. Real estate, I'll tell you exactly where it is. It's really easy. It's at Philly Office Retail on the first floor. So I'll just go over it real quick. So this Saturday on the 8th, we actually have a fellow Jumpstart individual that's coming there to speak, Janice Benstock.
Oh, yeah.
He's going to be talking about getting your real estate license and being a real estate investor. That's at 10 a.m. And then that Monday night, which is the second Monday, is going to be 6:30 at Philly Office Retail, first floor. The registrations, everything, it's on Eventbrite, it's on Meetup, it's on Facebook, it's on LinkedIn. Real Estate Niches Investors Club. And like I said, we have 6 months of already signed up subjects. We're every Monday, second Monday of the month, January through June, every second Saturday of the month, 10 a.m. to 12 p.m. We have subjects for the next 6 months scheduled. We'll take off July. We'll be back in August and go right to December again. So we're committed to provide education, networking, and creating opportunities. And what was really nice, Ken reached out to me and said, "Hey, when are you coming back?" I'm like, "Oh, your construction's done." I was all excited because we were out in Delaware County. Now I'm back in Philly, so I'm excited about it.
Awesome. Well, Joe, if you're able to, while we're chatting here, just shoot me over the link to the event page, and I can put it in the chat. Or if you want to put it in the chat, that works too.
You know what? Let me see if I can get that.
Well, I just want to make sure I didn't. I googled it, but I didn't want to get the wrong one.
Let me see here. Let's see if I can get that. If you go into Eventbrite, let me see if I can get there. Okay, hold on 1 second.
You're good.
I'm trying to move as quick as I can.
That's all right. No worries. We're good on time, like I said.
It's all right. So if you go to Real Estate Niches Investors Club on Eventbrite or Meetup.
Okay, gotcha. I found the one here.
Either one.
Cool. I will drop that link.
Found it?
Yep.
You found it? Okay. And yeah, it's a Saturday, this Saturday, because it's the 8th, it's the second Saturday. And then this following Monday, second Monday, all the events are there, all the subjects are there. I'm really excited about giving back and providing. That's going to be our mentoring portal. I mean, I just don't have the time to facilitate mentoring throughout the day. Obviously, I'm on Clubhouse as well. So I have a Saturday, Sunday hour on Saturday mornings and Sunday mornings as well. So it's a lot of giving back in that way on those selected times.
Cool. All right, great. Next question we have here is from Brenda, and she was wondering, and I'm not sure if you can speak to this or not, but what are the differences between LendingOne and Spring Garden Lending in terms of financing?
Great question. I almost worked for the company, actually, that lends money to Spring Garden Lending. And I turned it down because there was a non-compete. So it wasn't really, if I'm going to be the Philly guy, I'd rather work with a company that I don't need a non-compete, not to compete with Spring Garden, because that company, which I won't name, I signed off on documentation, lends money on behalf to Spring Garden. So Spring Garden is technically a broker.
Right.
They broker their money. I mean, so the difference between me and Spring Garden Lending is origination is lower, pricing is lower, much lower. And hopefully you get the same or as better customer service closing your loans in a timely manner. Mm-hmm. So that's the difference right up front that I can tell you for a fact.
Okay, awesome. The next question here comes from Doug, and he was wondering, are these loan products presented as all cash offers on opportunities, even though it is being financed? How do we obtain a proof of funds letter for these products?
Well, any realtor that's in the business right now will not do a cash offer if you're using private financing. If I provide you a letter of interest on this, like a pre-approval letter, that's not a cash purchase. Mm-hmm. So I don't give you fake proof of funds letters. Mm-hmm. So I have no plans of doing that. I plan on only providing, pre-approval letters for qualified borrowers.
Gotcha. So yeah, I mean, even though people might think of it as all cash, it's not going to.
Okay. No, because I've seen deals blow up because individuals thought, hey, I can make a cash offer and then sneak in a private loan. Mm-hmm. And the selling agent and the seller, they can cancel that application and take your deposit money very quickly. It happens all the time because there's these workshops out there telling you to do that. And then they turn around, they're not there when you're making these offers, and now you're losing your deposit money. Now the money that you paid for that workshop was worth less than because you also lost your deposit money on the deal that told you to do that. So yeah, I wouldn't suggest doing that at all.
Okay, great. And our one of our last couple questions here comes from Courtney, and she was wondering, does the actual person, and this seems like a general question, but does the actual person need to own the LLC, or can the LLC be owned by a trust? And I guess that's to use their LLC for your.
Well, so who's the trustee of the trust? The same person that owns the LLC? That's the question of the day. So, we could use a revocable trust. We can't use a non-revocable trust. Mm-hmm. So if it's a revocable trust, I'm going to look at the trustee. I'm going to look at the beneficiaries of that trust and see how that lines up, how the flow chart looks. So have I looked at that before and done loans in that scenario? Since I'm already talking about it, I would say yes. Okay. So am I friendly to it? To a point, depending on what you're trying to accomplish. I mean, somebody is signing as a guarantor. So there's no way avoiding that. So again, if that's what you're trying to avoid, I'm not your guy. And that's okay. I'm not looking to do every deal.
Gotcha. And our last question for tonight comes from Trina, and she was wondering, I want to start a line of credit to purchase a property. What documents do you need to get started with the process?
Okay, so a line of credit being a revolving construction line of credit or a business line of credit. There's two different things, and they require two different type of experiences. One is more credit related, which is the business line of credit, and that gets you liquidity to put forward equity toward the deal when you're using private lending. And private lending, we need to see deals done. So if you don't have any experience, you don't have any deals done, it's going to be very hard to get an established revolving construction line of credit right off the bat. Let's get a deal done. Let's get a second deal done. Let's show some profitability. Let's show some experience. Let me get comfortable with you. Issuing a revolving construction line of credit takes 48 hours for me. It's not very complicated at all.
Great. Awesome. Well, I think that's, I see a couple people have their hands raised. If they could type their questions in the chat, that would be great, just so we can do them all from one place. But yeah, I think that unless they don't type any questions, that wraps up our session for tonight. Joe, I just want to thank you again so much for dedicating your time here tonight. I thought it was a great discussion and covered a lot of good topics.
Derek, thank you very much. I really appreciate your time and your professionalism. Just remember, again, anybody that wants to give me their name, full name, their email, and phone number, I can set up a portal for them immediately. And then anybody wants to come either this Saturday, 10 a.m. to 12 p.m., we have Janice Benstock. And then Monday night, I'll be presenting on private lending and breaking down the checklists and requirements to be in the private lending environment as a professional real estate investor.
And that concludes my conversation with Joseph Scorese, a mortgage industry professional with LendingOne, about the loan programs and options available to aspiring developers seeking to rehab properties. The interviews on this program are recorded during Jumpstart Germantown's weekly Jumpinar series, which takes place via Zoom webinar on Monday nights at 7 p.m. And if you'd like to participate in the live Q&A with our guests, be sure to head to jumpstartgermantown.com/events and register for next week's Jumpinar. And if you're interested in starting a Jumpstart program in your own community, visit gojumpstart.org and see our how-to guide and open source training workbook. Thank you so much for listening to the Jumpstart Philly Real Estate Radio Show on Germantown Community Radio WRGU 92.9 FM, and be sure to tune in next week.